Hope you're all doing good. If you could respond through chat, available. Good evening, Rini. Good evening. I hope you guys remember me. A long time ago, you may have come across me. Good evening, everyone. So I'll not delay much, but I just want to check if everything is audible. Audible, visible. I'm sharing the screen now. Is the question paper visible? Is this the first question that you have? Which of the following expenditures can be classified as revenue expenditure? Okay, so I'm frankly a little disappointed with the number of people who are attending. Can someone tell me what is your normal strength, class strength? Waiting for someone to respond. Okay, around 35. Okay, 35, this number is okay. 14, 35, 36 participants, this number is okay. No issues then. I'm okay with the number. I thought it would be much like 70, 80 or 100. So I see only 12 participants now. There are 14 including me and the host, but 12 participants otherwise. That's all right. It's okay. How was the test? Have you guys already taken the test? When did you take the test? Again, waiting for a response. Was it a test that you took today or was it a few days ago that you took the test? Have you taken the test? Few weeks back. Okay, that's quite a delay. So before Diwali then. Okay, can someone come online? Can you raise your hand, any one of you who's just for me to get an understanding of what things are and how I have to go about the discussion. Can someone raise hand? Anyone who's keen, who's willing to talk? So waiting for someone to raise hand. No one seems to be interested. Rini, do you mind raising your hand? Or Harini, one of you? Okay, someone has raised hand. Rini, okay, Rini has raised hand. Rini?
Yes, sir. Good evening, sir. Am I audible? Hello, sir. Am I audible?
You are audible. So tell me when approximately conducted?
So it was long back actually. Yes, before Diwali, definitely.
All right. Okay. So was it during class hours or were you just given the question paper and asked to write the test whenever you want?
Yeah, like that. We were asked to.
Write it whenever you want.
Yes, yes.
So I don't know whether you guys have the question paper with you and the answers with you. So normally, okay.
Okay.
Rini,
Okay.
all right. So how I normally do the discussion is that when I do it quite immediately after the test, I ask for the answers. My voice better now, Arvind?
Okay, sir.
Okay, thanks, Arvind. Okay, so what I normally do is that I ask for the answers from the participants. Then I have a discussion, and then I tell the correct answer. But since the test seems to have happened quite a while ago, there is a good chance that you wouldn't remember much from the test. So I'll just straight away take one question. 50 questions is what I'll be discussing, the first economics part of it. So maybe in an hour and a half, I'll be able to finish it. Okay, let's see about it. So I'll start with the first question. Which of the following expenditures can be classified as revenue expenditure? Okay, just one more input I just need before I start. How much has been completed in economics? What is the last topic that is completed? Can someone type it in? I wanted to ask Rennie, but I forgot to ask. What is the last topic that is completed in economics? All right, GST. All right. Okay. So there might have been some questions which is beyond what you have learned, but that is all right. Thank you, Sivapriya, for your response. So let me go with this. These sort of questions you'll be able to answer. Which of the following expenditures can be classified as revenue expenditure? Okay, revenue expenditure is the question. So when we say revenue expenditure, any expenditure of the government which is towards the regular recurring expenditures, or which does not lead to asset creation or a liability, loss of liability, that is what we call as revenue expenditure. So loans given to local bodies, the moment you say loan, it is an asset that is getting created. Okay, it is an asset that is getting created, so that is ruled out as revenue expenditure. It is a capital expenditure. Subsidies subsidies in fertilizers is definitely a revenue expenditure because it is towards the regular recurring one, and there is no getting back of subsidies from the center's perspective. Grants given by center to states is also the same, and administrative expenses also. The answer here is C. 2, 3, and 4. C is the answer. Okay, so at any point, if you have any questions here regarding any of this, feel free to ask me then and there. You don't have to wait for a while before you ask me the question. All right, does anyone have a question in the first, or a doubt in the first question? Okay, no response, so I assume there is no question. At any point, if you do not understand, please don't hesitate to let me know. Okay, so C is the answer over here. For this one, answer is 2, 3, 4. Second one, India's national income will always be higher than India's per capita national income in a year. That's one statement. So the question is, which of the statements given above are correct? Okay. Which of the statements given above are correct? So what is correct is the question. All right. So India's national income will always, normally in films questions, the trick lies in words like this. When you say always, we say the chances of that being wrong is quite high. Okay, when you come across words like always or or only, these are certain words which are trick words, but that doesn't mean that the statement will definitely be wrong. In this case, we are saying that national income will always be higher than per capita national income in a year. So per capita, look at it as a formula. Per capita national income is equal to national income divided by population. Okay, so the very concept of per capita national income itself is a divided version of the national income. So it is quite logical to say that national income will always be higher than. The only circumstance where it will not be higher is when you assume that the population of a country is 1. It is an unrealistic assumption, so we will not make such assumptions. Okay, so the statement can be taken as true. National income increases when there is full and optimum utilization of a nation's resources is a very generic statement that we can take as true. And then the third statement, per capita national income increases when the rate of growth of national income, is, okay, just one second. Okay. When the rate of growth of national income is greater than the rate of growth of population. So we are saying when the numerator increases by greater than the denominator, then the per capita national income will grow, which is quite logical. It's a mathematical equation. So the moment you write this equation here, it becomes very straightforward. 1 and 3 becomes very straightforward. The answer is 1, 2, 3 because second is a very generic statement, which is also correct. Right? So that is the second statement there. Moving on. Okay, I am getting a question from there. Let me see if first statement you didn't get. All right, I'll explain it. See, it says that national income will always be higher than India's per capita national income. So what is the formula of per capita national income? Per capita national income, sorry. Per capita national income or any concept is equal to national income divided by population. This is the formula. So here we are saying that India's national income will always be greater than per capita national income. So you're saying that let's say national income is 1000 and let's say there are 10 people in the country. Per capita national income will be equal to 100. So 1000 is greater than 100. This national income is greater than per capita national income. Okay. Under all circumstances, because you are dividing this, you're taking the national income and you're dividing it by the population, the per capita, see, what is the concept of per capita? Per capita is average income. Let us say in your household, your father is earning, your mother is earning, but the two children, let's say there are, there's a mother, there's a father, and there are two children. Father is earning, let's say 50,000 rupees. Mother is earning, let's say 60,000 rupees. Or let's say 70,000 rupees. So total earnings of the family is 1,20,000 rupees. Okay, total earnings of the family is 1 lakh. Okay, cut 10 here. Sorry, 1,20,000 rupees. So, but there are now total earnings of the family is 1,20,000 rupees. That is like national income. We are asking per capita income of the family, which means we'll include every single individual. There are 4 people in the family. So you'll divide it by 4, which will give us a value of 30,000 rupees. 30,000 rupees. It's just a concept of average. Per capita is a concept of average. Your total versus average, which is going to be higher. Always the total is going to be here. That is the first statement. Hope that is clear. Rini, if it's not clear, let me know. Okay, got it now. Okay, maybe you read the statement in reverse. Okay, great. Okay, that's the second one. Third one, effective revenue deficit. So this is a concept that we would have seen in the various deficits that are there. Have you seen the various deficits? Fiscal deficit, revenue deficit. Is it something that has been taught in class? Because you said the topic last taught is GST. Okay. So if it's not taught, I don't think I'll be discussing it now. I'll just tell you the answer and I'll leave it, because then the way that it will be taught will give you a holistic understanding rather than if I tell you the answer now. So the answer here is one only. Okay. Now, why is the second statement wrong? It says it is not considered, but the fact is it is still considered. It is considered when the annual financial statement, what is annual financial statement? The budget. When the budget is presented, there are 4 deficits which are presented along with the budget. Number 1, something called as the fiscal deficit. Number 2, something called as the revenue deficit. Number 3, something called as primary deficit. And finally, something called as effective revenue deficit. Okay. See, all these 4 along with this public debt. These 5 concepts have to be explained in together, one by one. First explain fiscal deficit, then explain primary deficit, then explain revenue deficit, then explain effective revenue deficit, and then explain public debt. These 5 concepts have to be explained simultaneously. If I just take time to explain revenue deficit alone, I will have to first explain revenue deficit to you, then only you will understand effective revenue deficit. But when I explain revenue deficit, I also have to tell you what is fiscal deficit. This is a topic that will take us about half an hour for me to completely convey to you, which we don't want to do now. It will be done as part of the class. See, the understanding, I think, was that the entire public finance was over. That is why they conducted the test, but clearly it was not over. So that is a mistake from our end while conducting the test. So just note down the answer as A1 only in this case. All right. Moving on. 4th one. Let's focus on the questions that you are familiar with. Okay. Just a few questions, leave it as okay, out of syllabus. Okay. So which of the following taxes were subsumed under GST? Okay. Excise duty was subsumed. Okay. Central excise and state excise and all those. Luxury tax was subsumed. Entry tax, also called as octroi, was subsumed, and customs duty. Customs duty is the only tax which continues to exist even today as a separate tax. Why? Because if you include customs duty in GST, then there's no one revenue source of the government is lost. Second, the central government cannot control trade. Customs duty is primarily used to control trade, import and export, to regulate import and export. An additional purpose is that revenue can be generated. If it is added as part of GST, then GST Council will decide what should be the customs duty, not the central government. So central government will lose power of that. So customs duty is not included in it. In addition, if you look at any imported good, on the imported good, there will be an import duty or the customs duty, both are the same, plus there will be a GST. If you include this in GST, there will only be one tax, which is again a loss for the government. So the answer here is A, 1, 2, and 3. The 4th one is not part of the answer. See, at any point, if you have any questions, feel free to ask me then and there. Okay, you don't have to wait till some other point to ask questions. If you have questions, raise it then and there. There are only about 12 people now, so we should be able to tackle it and go on. If you don't understand anything that I explain, ask me, I'll explain. Okay. So now the next question is, the government of India has committed to fiscal consolidation without compromising on expenditure. Which of the following measures can be taken to implement the same? What is meant by fiscal consolidation? This is something that you may not have learned in class. It's not something that is generally taught in class. What is the meaning of the word consolidation? Consolidation means stabilization, bringing about stability. Okay, consolidation means, I'll explain, Harini. Just give me, I'll just finish this and then I'll explain. Fiscal, we know, is government's finances. Government's finances. There has to be a stability in government's finances. So when is there instability? When do we say, we personally, think of it from our personal perspective, we have income in our household, we have expenditure that is happening in our household. When do we say when we are stable? When our income is sufficient to meet our expenditure. When do we say we are unstable? When our income is not sufficient, we are not able to meet our expenditure. As a result, we are having to borrow more and more. or we have to depend on other sources, or we'll have to sacrifice on something that we need to get. So here we are trying to consolidate or stabilize our fiscal position without compromising on expenditure. How to do that? Number one, reducing tax avoidance. When you reduce tax avoidance, your income increases, the government's income increases. So that is one way. That is definitely part of the answer. Okay. Second, minimizing tax evasion. When you minimize tax evasion, it again increases the income of the government. So that is one. Cutting down expenditure on productive assets. See, cutting down expenditure will stabilize our position, but on productive assets, which means that we are losing future potential to generate revenue. Here we have specifically said without compromising on expenditure. Okay, without compromising on expenditure means that we will not unnecessarily cut down expenditure. So this is not part of the answer. This will lead to future loss for us. Narrowing tax base. You would have learned what is tax base, the number of people or the source from which we are collecting the tax. Narrowing means reducing. If you reduce the tax base, the income will go down. So we don't want that happening. Increasing tax concessions, which means that once again income will go down. The more concessions you give, the less income you are going to receive, government is going to receive. So that is also not part of the answer. So obviously the answer is A, but let's also look at the sixth one. Granting subsidies by direct transfer schemes. See, one of the biggest concerns with respect to subsidy is that when you give subsidy, there is a lot, when the government gives subsidy, there is a lot of leakage. There are a lot of middlemen who are stealing a lot of that money. Okay, when it is given through government servants, or when it is given in the form of reduced price of goods, what is happening? Good quality rice and all those PDS from the PDS store are stolen and sold outside, and then bad quality is supplied here. All that is the problems that are there. Okay, so when you grant those subsidies by direct benefit transfer, which means that directly into us, let's say I am the one who's getting the subsidy, I will pay full amount and buy the commodity from the market and then submit a bill, and the government will transfer a subsidy into my account. Instead of giving a subsidy on the store, in the store, government is saying you buy using the full price, by paying the full price, then you come back to the government. So government is willing to pay that money directly into your account. It reduces in between people stealing account and leakage and all those. So this is also a good idea to reduce the burden. It rationalizes the expenditure. It reduces unnecessary expenditure. So answer is 1, 2, and 6. The answer is A there. Okay. So just 1 second. Who was it? Okay. Harini has a question about what are these taxes. Okay. What are entry tax and luxury tax? See, I am sure that you are aware of what is called as excise duty. Excise duty is the duty collected on goods, tax on goods. So previously we had something called as excise duty, and we also had something called as service tax. Now these two have been combined, and now we call it as goods and service tax. Excise duty is tax on goods, service tax is tax on services. Both have been combined and it's called goods and services tax. So excise duty has been subsumed. What is luxury tax? Prior to the introduction of GST, on certain luxury items, the state governments used to separately charge a tax called as luxury tax on luxury items. Tax, extra tax, okay, extra tax on luxury items. That is now not there anymore, because once again, if you allow the states to individually collect a luxury tax, then once again different states will have different taxes, thus defeating the purpose of one nation, one tax. So luxury tax is also subsumed. It is not there as anymore. What is entry tax? Entry tax, which is also called as octroi, OCTROI, octroi. Okay, I'll write it again here, OCTROI. If you have ever traveled from one state to another state by road, you would have noticed that whenever you are entering a new state, there will be something called as a check post. And in the check post, there will be long queues of lorries which are waiting. Why? Because prior to GST, whenever you moved from one state to another state, whenever you are moving here, when you enter a new state, you have to pay, whoever is going there, the lorry people, they have to pay a new tax on entering a state. called as entry tax, or also called as octroi. So this used to cause a huge delay, because every lorry they'll wait, they'll assess the quantity of goods there, the quality of the goods there, they'll check if it is of what is the quality, what is the item, what is the value of the item, and then a tax is imposed, and then they have to pay the tax, and only then they could go. Okay, so that used to delay the whole process, transportation of goods between two places, vegetables and fruits and all those, that used to stay there in that check post for hours and hours, maybe sometimes even days, thus leading to rotting of those food items. So that has been abolished. Again, it has been brought inside GST. When you say GST, when you look at GST and you think, oh, GST is so high, you have to understand that now all these taxes don't exist anymore. Previously, in addition to excise duty, there used to be something called as luxury tax, there used to be something called as octroi, and more such goods. All that has been subsumed and brought inside GST. So these are the different taxes that we have. Okay. I hope this is clear. Yes, I will. Archana has also asked a question there. I will. Harini, I hope this explanation is clear for you. So there is a question about the tax concessions part. Okay. Now, see, I totally understand your point. Archana is saying, sir, cannot tax concessions eventually result in reducing tax avoidance? Possibly. And who is this? Can you add your name along with your unique ID? Whoever asked me to explain the tax concession point again. 2053577. Can you please add your name along with your unique ID so that I can refer to you? Waiting for you to add your name. Akshaya. All right. Great. Thank you. See, now there is a good point here. See, increasing tax concessions is the point that we are asking about, right? So you are saying that won't increasing tax concession lead to maybe you get more tax concessions? Maybe you will feel, okay, fine, now they are giving me so much concession, let me go and pay tax. That is a possibility. In economics, there is always something that you have to remember whenever you are trying to answer questions. Okay, one action has been taken, you have to look at what is the immediate effect. Okay, now what you should not do, so this is step one. Okay, what you should not do is you should not look at what is step two, you should not look at what is step three. Okay, why do I say so? Because immediate effect here is when there is an increase in tax concession, what happens? Government's revenue falls. That is the immediate impact. That is something that you have to look at. Okay, when government's revenue falls, what might happen? Government might reduce expenditure. Government might reduce expenditure in future. Government might reduce subsidies, or government may not do anything, or government may or might print new notes, print currency. Who knows what can happen? Or you could say, like who was it? Like Archana was saying, this might prompt people to pay tax. Or maybe people will not even pay that much tax. People are saying, okay, earlier I was thinking of paying, now government is giving concessions. So people who are not getting those concessions, they might also start evading tax. So, but people may tax, people may evade. How do we know with certainty what will happen? We have no way of finding it out. So these are all step 2, step 3, what may or may not happen. We cannot know with certainty what is likely to happen. We can make, see, one person can argue saying it will lead to more people paying tax. Another person can argue saying no, less people will pay tax. These are opinions. We cannot predict. So always in economics, whenever you talk about growth, whenever you talk about development, you talk about inflation, which you will be learning later, you talk about inflation, you talk about, let's say, money supply, increase in money supply, decrease in money supply, you talk about investments from abroad. In all these cases, whenever an action is taken, restrict your thinking to the immediate effect. This has happened to me in previous examinations when I have gone and sat in the examinations after I started teaching, right? I see a question and it has happened that I think, okay, if this action is taken, then this will be the result. But if this happens, something else will happen. So I'll start answering based on that. Ultimately, I'll get confused, completely confused, because contrasting things will happen. Okay. So never ever fall into that trap. Always, whenever you look at the action, look at the immediate effect of it. When there is an increase in the tax concession, what is the immediate effect? Immediate effect is that government's revenue falls. Government's revenue falling will lead to fiscal instability. It will not help us. So this is not part of the answer. In fact, if you eliminate this one option, this is eliminated, this is eliminated, this is eliminated, you can automatically arrive at the answer. And it's not a very difficult option to eliminate either. I hope this is clear, Akshaya as well as Archana. Understood, Archana. Okay, how about Akshaya? Okay, great. Let us proceed then. Number 6, disguised unemployment. You would have probably learnt about this in the end of the first chapter. What is disguised unemployment? When there are too many people employed to do a job. The moment I say too many people, what it means is that more than necessary. Let us say 5 people are required to complete a job. If 8 people, if 6 people are, 5 people are required to complete a job, let's say job is X. If 6 people work on that job, we say there is disguised unemployment. How many disguised unemployment? One person seems to be employed. On the face of it, it looks like that person is employed, but that person is not contributing anything at all. All that this person is doing is eating into someone else's income. Let's say a job called as X. The value of the job called as X is, let's say, 1,000 rupees. Now, earlier 1,000 rupees could be split between 5 people. Now 6 people will split the 1,000 rupees. So what is happening? Everyone's income goes down because of this one person who's not necessary there, who's been employed. So a manufacturing firm hires too many workers to accomplish a one-man job is what is disguised unemployment. If you have come across this in the first chapter, you would have come across the term disguised unemployment in the context of India's agriculture. But that is just an example. In India, agriculture is where you will see disguised unemployment. But disguised unemployment is possible in any sector. See, for example, let's say there are, I don't know if there is anyone from Kerala here. So in Kerala, or even in maybe probably in Bengal also, wherever you have strong labor unions and all those, okay, when you have all these labor, they'll talk about a lot of rights. So when there is some job available in the public, when it could be done by 4 people, they'll say, no, we have so many people here, 4 of us will not come. You will have to hire a minimum of 6 of us for us to come and do the job. Which means that essentially what you would have paid 4, you are going to pay to 6, or you might end up paying extra. Okay, so it is possible that disguised unemployment is there in the service sector also. Because I took the example of labor because all this labor is an example of services. Is this clear? Is disguised unemployment clear? Okay, clear. Thank you, Akshaya. All right, great. Is this shadowed resource? Not quite shadowed resource, Shivapriya, but I cannot comment on shadowed resource without a context. Where did you come across shadowed resource? In different places, it could mean different, in different contexts, it could mean different things. It is not what is shadowed resource as far as I know, but depends on context. If you have come across that term somewhere, okay, in IT, so are you talking about people sitting on bench? Are you talking about that in IT sector, there is something, a concept called as bench, where a person is hired, but they don't have a job. Okay, no, that is not the same as this. See, let us say in an IT field, if there is a project and that project requires only 5 members in the team, but because there are some extra resources here, we put them also inside. So 7 people are working. Then it becomes a bench can contribute to disguised unemployment, but a bench itself does not contribute disguised unemployment. All right, because whoever is sitting on the bench, they are going to get their own income without eating into someone else's income. And a company will not keep the people on bench for a very long period. It will be a loss for them. All right. Moving on. The classification of organized and unorganized sector in India is mainly based on, see, the moment you say organized, okay, what is meant by organized? Everything, there are certain rules and regulations. That is what is meant by organized. Okay. So when is it that rules are laid and those rules will be compulsorily followed? If there is a company and that company says we have a policy, these set of rules, we'll follow that, which means they are setting their own rules. If they violate those rules, who is going to question? No one is going to question. So when we say something is organized in nature, there has to be rules and regulations which are laid from the outside. When we say laid from the outside, we mean an entity like a government. Government says there are certain rules which every company has to follow. What are these kind of rules? So minimum work hour, minimum or maximum work hour, sorry, maximum work hours. Only these many hours per day a person can work. Okay, or minimum facilities to be provided. Like if there are more than 10 employees, there has to be a creche facility, or there has to be a compulsorily a grievance redressal board inside that organization, or there is a minimum wage to be given, or a bonus has to be paid to its employees, or employees should get provident fund. All these are rules and regulations which the government lays upon it. When is it that these rules and regulations are applicable? When they are part of some act. For example, a company is set up under something called as Companies Act, which is a law. Then that company is bound by these regulations. Okay, that is what is an organized sector. When all this is not there, that is an unorganized sector. When there is no external compulsion, that is when it is an unorganized sector. So assurance of working conditions, what gives that assurance? Law gives the assurance. So when an organization has assured working conditions, that is when we call it as organized sector. Okay, if there is no assurance in the working conditions, then it is unorganized. Proper working conditions, but getting justice, because they are not governed by any law. So the moment they are governed by a law, there is assurance of working conditions. That is what differentiates an organized and unorganized sector. There is assurance, not just an organization with proper good working conditions. There has to be an assurance through law. So that is why A is the answer. Hope this is clear. Moving on. By which of the following measures a revenue deficit can be reduced without creating liabilities? So you have not learnt about the concept of revenue deficit. So I'll just simply give you the answer without explaining it, and I'll leave it at that. Okay. Increase in GST tax rates is definitely one of the answers. Disinvestment is not, because here, see, if you just apply simple logic, they are asking about the revenue deficit, which means it has something to do with the revenue account. If you know that much, it is easy. Disinvestment of IRCTC is part of capital account. Okay, so that cannot be part of the answer. Rule out. 1 and 3, 1 only. Now, increasing the subsidy, when you increase subsidy, what happens? Your expenditure increases. Whenever you say deficit, what is deficit? When your expenditure is more than your receipts, that is what is deficit. So when you increase the subsidy for manufacturing electric vehicles, your expenditure increases or your receipt decreases. One of those will happen, which will only increase the deficit. So which of the following revenue deficit can be reduced? Answer is A, 1 only. I know that revenue deficit has not been taught, which is why I'm not going to go any deeper into this topic. So which of the following parameters may not be useful for the development of World Happiness Report? World Happiness Report, we know, follows 6 parameters. GDP, not GDP per capita actually, but it's okay. So GDP is one of the criteria. Freedom to make choices, freedom from corruption is one of those things. What is the only thing which is not there? Availability of natural resources. So the answer is availability of natural resources. In addition to these 3, we also have generosity as one of the criteria, social support as a criteria, and a life expectancy as a criteria. These are the 6 criteria which will be marked on something called as a Cantrell's ladder. Was it covered in class? This concept of World Happiness Report published by United Nations Sustainable Development Solutions Network. Was it done in class? Okay, Harini says yes. No, it would have been done as part of growth and development, 2nd chapter, before public finance itself. Harini says yes, but 2 people are saying no. It is part of the 2nd chapter. Okay, you would have been taught about Human Development Index, then Inequality Adjusted Human Development Index, Gender Development Index, Gender Inequality Index, Multidimensional Poverty Index, Global Hunger Index. Similarly, you would have been told about World Happiness Index also. Then Gini Index. Okay. So if it's not there, it is available in your textbook. I hope you have all received your core economics textbook, the purple, or not the purple, the magenta reddish color cover. Okay. See, indices were taken. If you were told about this World Happiness Report, as part of it, there is something called as Cantrell's ladder. Something unique about World Happiness Report is that unlike other indices, see, all other indices, how it is done is, you have some objective way of measuring. For example, you take Human Development Index, there is health, education, and standard of living. Health is measured in terms of life expectancy. Okay, and based on that, we arrive at an index between 0 and 1. Education is measured in terms of mean years of schooling, expected years of schooling. You arrive at a value between 0 to 1. Standard of living is measured in terms of per capita GNI at PPP terms, which is measured between 0 to 1. Whoever measures this, there will be a fixed answer. There will be only one answer, because how many people are dying, what is the average age, what is the life expectancy, there cannot be any subjectivity there. It is, but if you talk about this index, in the sense that I told you about these 6 factors, right? These 3 plus the 3 that I told you about, people are simply asked a question. Okay, consider the GDP in your country, consider the freedom to make choices, consider the corruption levels in your country, consider the generosity, social support, and the life expectancy, and tell us, there is imagine a ladder which with 10 steps, with the bottom step being 1, the top step being 10. Now look at all these criteria, 6 criteria, and tell us where you stand on the ladder. Are you standing, are you not getting on the ladder, which means you are unhappy, you are extremely unhappy. If are you on the 10th step, you are the happiest possible. In between, you are on the 5th ladder, you are not very happy, not very unhappy either. Okay, so it is just like Swiggy saying, how was the food? Rate us on between 1 to 5 stars. It is very similar to that. But this ladder on which this rating happens is called as Cantrell's ladder. For the same level of GDP, one person may be happy, one person may be unhappy. For the same level of corruption, one person may be happy, one person may be unhappy. So it is very, very subjective in nature. It is a very unique index in that sense, World Happiness Report. Okay. All right. Moving on. So the question is about mixed economic system. What is a mixed economic system? So there is something called as capitalism. There is something called as let's say communism, and in between something called as socialism. Okay. Capitalism says that everything should be private ownership. All decisions should be private. What should be produced, how to produce, who owns it. Communism says everything should be in the control of one entity called as government, and they should be the ones doing everything. Nothing should be private. Socialism believes that people should benefit, and for the benefit of the people, government has to work. Government will predominantly decide, but they may partner some private also. Okay, so a mixed economic system is very similar to socialism, but even more than that, a mix of private plus government together is called as a mixed economic system. Socialism is also predominantly government, but a mixed economic system is where private and government both will decide. So here answer is both government and market. When we say market, we mean private forces, private factors. Both government and market together decide the economic production and distribution. That is what is a mixed economic system. All right. So that is the 10th one. Okay. The 11th one is not something that is taught in class. It is just based on economics, current affairs. So I'll just tell you the answer here. Global Infrastructure Facility. Global Infrastructure Facility, GIF. Which of the following statements is correct? The answer here is 1 and 2. The difference, the wrong thing here is that it is not launched by World Bank and IMF together. It is by World Bank and one more entity, which could be a private entity also. So there is a private involvement here as well. So do read up about this Global Infrastructure Facility. It is an important, let's say, setup that is available for infrastructure development in the world. Okay. So do read up about that. Global Infrastructure Facility. So the answer there is A, 1 and 2. Sorry, the answer there is A, 1 and 2. Now, next question, Gender Development Index released by United Nations Development Program. See, the biggest trick here in Gender Development Index is that people get confused between GDI and Gender Inequality Index. Both are published by Human Development Index. Sorry, both are published as part of Human Development Report, not Human Development Index. I misspoke, I'm sorry. Both are published as part of the Human Development Report published by UNDP. Okay. Where GDI is a variant of HDI, whereas GII is totally new. It's completely different from HDI. It's an independent report of its own. All right. In a way, GDI is dependent on HDI. That is the trick there. In addition to this, there are also other gender reports like Gender Parity Index, Global Gender Gap Index, Global Gender Gap Index. So there are such reports also. So do read up about that also. In this case, Gender Development Index is very similar to HDI. It is a adjustment of inequality between male and female HDIs. As simple as that. That is the answer. C is the answer for Gender Inequality Index. Joint Index of Labor Force Participation, Reproductive Health and Political Participation of Women. Reproductive health measured by maternal mortality ratio, adolescent birth rate. Political participation measured by secondary level education and parliamentary representation of women, and labor force participation measured by labor market index. That is Gender Inequality Index. Okay, inequality adjusted Gini index for female we don't have, as far as I know, not any major index that has that. So that is the answer. Answer here is A. All right, the next one is gross domestic product is often calculated based on value added method. What do you mean by value added here? Value added means that what is the value? At every stage, there is an output from an industry and there is an input from an industry. So what is the difference between these two is the value added. So difference in the costs of output and input, as simple as that. It's a very straightforward question, that is value added. So let us say you are running a company where you are selling some product. That is your output. You are selling some product for 200 rupees. So we ask a question, how much is the value that you have added out of this 200? You say, I purchased a few goods and input material from various places at 150 rupees. Okay, I spent 150 rupees on buying something and I added a value of 50 rupees and I sold my output at 200 rupees, which means that 50 rupees is the value added by you. How did you arrive at that? Output minus input. A shopkeeper buys something from a wholesale store at 100 rupees per kg. He sells it at 120 rupees per kg. What is the role that he is doing? He is making some good which is available in some other place, available in this place, or which is sold in huge bulk. He's breaking it into small parts and taking the risk and selling it. For that service, he's charging 20 rupees extra. That 20 rupees is the value added by this person. So output minus input is the value added. Hope that is clear. Number 14. If the size of an economy is growing year after year, it implies that. This is actually a very tricky question. You will be very, very surprised with the answer. The answer is D. The total size of an economy is growing year after year, which means GDP of the economy is increasing. What does it mean? Does it mean that the growth rate of the economy must be increasing? Last year, let's say the GDP was 100. Okay, 2 years ago, 2018, let's say GDP was 100. 2019, GDP, let's say, is 120. 2020, let's say the GDP is 125. GDP increased, GDP increased. In both the cases, GDP increased. But in the first case, the GDP increased by 20%. That is the growth rate. How did you arrive at 20%? 120 minus 100, which is 20, divided by 100 into 100, rate of growth. So 20% it increased. In the second year, it grew by 4%. That's all. It grew, but it grew from 120 to 125 only, which means 125. 5 is the increase. 5 divided by 120 into 100, which is 4.2% growth. So here also there is growth. GDP is increasing. In the second year also it is increasing. But the rate of growth is higher here, is lesser here. Just because GDP is increasing in an economy, it does not mean the growth rate of the economy must be increasing. No. The growth rate of the economy may be increasing, the growth rate may be decreasing. Here the growth rate is decreasing. From 20% growth rate, now we only have a growth rate of 4%. All right. So the first statement is ruled out. That is wrong. Is the first statement clear? Can someone respond? Because only when it is clear, I can proceed to the next one. Okay. So first statement is clear. Great. The second statement now. Okay. Total investments must be increasing year on year. See, it is logical to assume that what is GDP? GDP is output. So output is increasing every year. So how can we say that output increases without saying input is increasing? For output to increase, input has to increase. That is the logic here. Total investment. Investment is nothing but input. Investment is input. GDP is output. Total investments must be increasing. So if output is increasing every year, then input has to be increasing is the logic. So here is where the concept of incremental capital output ratio comes into the picture. It is nothing but capital divided by output. Change in capital divided by output. This is the ICOR concept. Okay. Let's say in a particular year, we have an ICOR value of 5, not 5%, sorry. We have an ICOR value of 5. How do we arrive at a value of 5? Let's say 500 is the input and 100 rupees is the output. So we say that the ICOR is 5. In the next year, let us say 500 rupees. How can that happen? If you improve your efficiency. So what does that mean? This will be 2.5. What is happening here? Output is increasing, and because you are becoming more efficient, even without an increase in input, you are able to increase the output. So total investments must be increasing, not necessarily. Generally, output increases only with the increase in input. But it is not necessary that input has to increase for output to increase. Even with the same input, if you improve your efficiency, your output could increase. Okay. I hope this is clear also. If you have questions, please ask me. Not getting any response. Funnily enough, the number of participants has dropped to 7 from 14. So there are only 7 people left. One person without name, 2088964. Akshaya is there, Shivapriya is there, Harini is there, Vamshi is there, Rini is there, Archana is there. That's all. Okay, we can proceed. Archana is asking a question. Since GDP is the value of final goods, can we assume that GDP may increase due to inflationary aspects, irrespective of increasing in investments? Also possible. Also possible. Okay. So you could say GDP is equal to Q into P. So just because of inflation, GDP may look like increasing. That is also a possibility. But normally, when we say total size of an economy is increasing, we mean that real GDP is increasing. What is real GDP? Real GDP is the GDP of economy when the price is assumed to be constant over the years. So which means that the effect of inflation is countered. But your point is very true. Archana, your point is very valid. Here they have not clearly mentioned it, but generally when they say total size of an economy, they refer to real GDP, generally. I hope that is clear, Archana, but your point is very, very valid. Good observation there. Okay, as I said, the answer is neither 1 nor 2. Number 15. According to the annual budget, arrange the following in the decreasing order in the contribution of gross tax revenue. For many years, quite a few years now, corporation tax has been the number 1 contributor. Decreasing order is what they are asking. So I think it starts with, it would start with 1. Yes, this will be the first position, immediately followed by corporate tax, income tax, followed by customs duty. Answer is A, 1, 2, 3. Very factual question. There is nothing much to discuss here. You will have to observe these things when the budget is presented. Download the budget document and refer to this. Don't learn the previous year's budget. It's waste of time. Wait for the next budget, which will be announced in February, first week of February. Learn only that. Just look for these trends. Okay. Consider the following statements about depreciation. What is depreciation? It refers to the portion of capital goods which goes into maintenance and replacement of existing goods due to wear and tear. That's correct. To obtain net investment in an economy, depreciation is subtracted from gross investment. Third statement is also correct. Net is equal to gross minus depreciation. Be it in investment, be it in overall anything, net is equal to gross minus depreciation. So that is also correct. It takes into account unexpected and sudden destruction. No, it does not. It takes into account only predictable loss due to wear and tear. That is what is depreciation. This will be treated as a loss, but this will not be depreciation. So answer is 1 and 3. D. Okay. Which of the following is part of non-tax revenue receipts? Very straightforward. Non-tax revenue receipts. That's the key point. Dividends paid by PSU to a government. Yes. Non-tax revenue receipts. Dividends, non-tax. License fee, yes. Disinvestment, no. Why? Because this is capital receipt. This is non-debt capital receipts. Answer is 1 and 2. I'll proceed. If you have any doubts, feel free to ask me, even if I have crossed that question. Okay, very factual question. 18th one. The estimates of receipts and disbursement of annual financial statement are shown according to the accounting classification prescribed by CAG, Comptroller and Auditor General of India. It's a factual question. Nothing much to discuss over there. Which of the following can be possible benefits of greater financial inclusion? You think of it, if more people have access to banks, what is financial inclusion? People having access to banks and other financial instruments. Higher domestic savings, more people will save in a bank. Bank will not just take savings. If they take savings, they will be forced to give more investment. Otherwise, the bank will not be able to give you interest. So enhanced investment, it will lead to, or it is likely to lead to. Yes, Reniz, it can be learned as part of budget. When the budget is actual budget is announced, you can learn that. Okay. So enhanced investment, better delivery of welfare schemes, because everyone has an account. Now direct benefit transfer and all that can be done. Greater penetration of financial services like insurance and all those, there will be greater penetration if there is greater financial inclusion. Answer is 19D. All 4 points are correct. Okay. Which of the following are considered under national income of a country? When we say national income, we take into account all final goods and services. Consumer goods are final goods, capital goods are final goods, intermediate goods are not final goods. Okay, so final goods can be classified into consumer and capital goods. We have discussed this in previous when we learned the core economics terminologies, economic terminologies. Answer is Bombay 1 and 2, B 1 and 2. Consider the following statements about angel tax. Angel tax is something that is mostly found in current affairs. You would probably not know. This will be a learning for you. Angel tax is the, just one second. Angel tax is the tax levied on investments made by external investors in startups or companies. That is correct. Funds from investors above the fair market value are subject to around 30% tax. Yes, around 30% because it varies depending on different kind of investments. So what happens is, if a company has a particular value, let's say a company, every company has a valuation. Let's say a company has a valuation of 10 crore. Okay. That is a government which is valuing this company at 10 crore. Government says this company is worth 10 crore. But some external investor comes and says, you know what, I see a huge potential for this company. I want to buy the shares of this company. I want to invest in this company. I am willing to give 15 crore as investment. What is happening? This company is paying 5 crore more than the market value or the fair market value, which the government will say, why are you investing? Are you investing because you have a lot of black money and you want to convert that? I will not allow you to do that. I'll collect a tax on that if that is the case. So there is a tax collected on top of that. That is called as angel tax. Why is it called as angel tax? Normally, who's seeking investment in their company? Businesses which are facing some loss or businesses which are not doing well. So when you are in trouble, who comes to save you? Angel comes to save you. So anyone who comes to save you, any investor who comes to save you is treated as an angel here. So the angel tax concept. Tax on angels. Even angels are taxed. 22. Which of the following matters will come under the purview of Cabinet Committee on Economic Affairs? Again, a very factual thing. Answer is all 4 will come under the purview. Earlier, there used to be separate Cabinet Committee for UIDAI and some of the other matters. A year or so ago, all the Cabinet Committees were combined into this one Cabinet Committee on Economic Affairs, which is why it is in the news. Consider the following statements about securities transaction tax. I hope this was covered in class. It is a type of financial transaction tax levied on transactions done only on domestic stock exchanges. Once again, a trick, but here there is no trick there. Only is correct, because how can you collect a tax on some foreign stock exchange? That stock exchange is not under our control. So it is done tax collected only on domestic stock exchanges. That statement is correct. The second statement, STT is not applicable in case of government securities, bonds and debentures. That is wrong. It is applicable in case of that also. Answer is A, one only. Again, how are these relevant? These are relevant because there will be some current affairs news based on these transaction taxes. Otherwise, it is not very relevant. Okay. We are asking these questions so that these are generally considered to be peripheral areas which people don't read. So we ask questions from this so that you are aware of these areas also. Don't worry if you are not able to answer. Don't worry if you get really low scores here. Objective is to learn from every single test. Okay. Now the next question, who manages all these? Domestic debt, all that is managed by the Reserve Bank of India, no doubt. External debt is by the Office of Aid and Accounts, yes. And small savings is by the Budget Division of Ministry of Finance. That is correct. Again, very factual. These are things that you will not find in any textbook. You will have to refer to the government website and all those to learn these things. That is why we ask these questions, so that otherwise you might not even learn this ever. So we ask these questions. Okay. 25, we'll be at the halfway mark with this. With reference to the to India's decision in the recent past to cut corporate tax, which of the following statements are correct? Both private and public companies which are registered in India are liable to pay corporate tax. Yes, that is correct. Both of them have to pay tax. Reduction in corporate tax will make existing and new businesses more attractive to invest and generate more employment opportunities. Possibly, yes. So will make existing and new businesses more attractive, yes, to invest and generate employment opportunities. You can go with both. The only point of debate is, will it definitely? Not very sure, but it's a very generic statement. So you can go ahead and mark it as yes. Because that is the intention with which the government itself says. Government will make a statement that it will. So then you'll have to go ahead with that statement. These are all current affairs questions. Okay. Regarding the achievements of India during 2014 to 19, consider the following statements. $1 trillion has been added to the very, very factual question. So answer is, which of the following statements are not correct? 2 only is not correct. The first statement is correct. 1 trillion has been added. Average amount spent on food security almost doubled during this period. Yes. In terms of purchasing power parity, India is the third largest economy globally, not the fourth largest. First is China, second is USA, third is India. Okay. So that is why the second statement is wrong. Again, very, very factual. Where will you come across these things? Newspaper. I would have told you during the terminologies class itself, 70 to 80% or more of the questions in economics is going to be from current affairs. Consider the following statements regarding corporate social responsibility. It is a self-regulating mechanism. It is not, it is a self-regulating mechanism or self-regulating business model that helps a company be socially accountable to itself, stakeholders, and the public. Okay, general statement. India is the first country in the world to make CSR mandatory. Yes, that is very true. It is applicable only for Indian companies, not for foreign companies. Not true. Any company which is set up in India, which has a branch or project office in India, it is applicable to all of them. The answer is A. Shivapriya, yes, these data could change before the 2021 prelims. I assume you're talking about 2021 prelims. A lot of these facts will change before or are likely to change before 2021 prelims. That is why these are not taught in class. You will have to read it from different sources and learn from there. Okay. And you will have to keep updating yourself based on what is happening in the current affairs. These are likely to change with time. Okay. So this is a sort of a tricky one. The next one, you're not likely to probably already know that. Laffer curve you would know. Okay. Which are correctly matched is what they are asking. Laffer curve is correct, right? You would have learned Laffer curve when you learned Gini index. Wait, Laffer curve, hold on 1 second. Laffer curve is, sorry, Lorentz curve is what this is. Sorry, my bad. Lorentz curve is this national income. So fourth is wrong. This is also wrong. This is also wrong. Phillips curve is correctly matched. You probably don't know Kuznets curve. I don't know whether you know Kuznets curve. Okay. Between tax rate and tax revenue is Laffer curve. Correct. I made a mistake. I got excited and so this is Laffer curve. Laffer curve is between tax rate and tax revenue. Something like this, saying that there is a peak level of taxation at which people will be willing to pay tax only then. After that, if you increase the tax revenue will come down. Okay. Here is the tax rate. Here is the tax rate. Here is the tax revenue. Tax revenue. Revenue will fall down. So this is the Laffer curve. Lorentz curve is what you base the this thing out of. Your Gini index. So this is the Lorentz curve. This is the Lorentz curve of equality. This is the Lorentz curve. This whole thing is the Lorentz curve of inequality. So that is Lorentz curve. So these are interchanged. So you know that much. You will be able to mark 1 as answer because there is no other option. You will mark 1 and 3. Okay. Phillips curve you are yet to learn. Kuznets curve you are yet to learn. Maybe you will come across Phillips curve. You will definitely come across when you learn inflation. Kuznets curve you may not. Just you can Google and you can get to know. But I'll give you an idea. What is Kuznets curve? You would have learned about Gini inequality index, right? Okay, Gini index is taken on the y-axis, and on the x-axis you take per capita income, per capita national income. So the idea is that initially the per capita national income is also low, the Gini index inequality is also low, but over time when per capita national income increases, initially the Gini index increases, which means inequality increases when income initially increases. But it will reach a point where so much income is generated that it will start gradually with further increase in national income, per capita income, the Gini index starts reducing, which means that there will be greater and greater equality over time. So this is what your Kuznets curve. This is also called as Kuznets inverted U-shaped hypothesis. Okay, that is what is Kuznets curve. Phillips curve you will learn when we reach inflation, when you guys reach inflation. Okay. So the answer here is 1 and 3. C. C is the answer here, 1 and 3. Which of the following forms part of internal debt of the government? Internal debt of the government, which means debt from domestic sources. Okay. Interest payments is not part of the debt. Interest payments itself is not part of debt. Interest payment is a payment, right? It is not a debt. Debt means we are primarily talking about the principal amount. So market loans is yes in the form of G6, ways and means advances. This is from RBI. This is from public. This is from other internal liabilities. From other internal liabilities. So in a sense, this is also from the public. This is borrowed from Provident Fund organization and such organizations and small savings scheme and all this. Answer is 1, 3, 4. Interest payment is not debt itself. Interest payment is the obligation on debt. Okay. Now moving to question number 30. After that, we have 20 more questions, but we should be able to do it at a faster pace because more factual going from now. Which of the following is correct about Fiscal Stability and Development Council? Its only role is to ensure, this is the trickery, its only role is not that. It has many roles. Overall fiscal stability, overall development of the country, that is all there. Interregulatory coordination is one of the major roles that it has. It is a multi-member body including all these people. Yes, that is correct. That is why we are even talking about interregulatory coordination. Council functions under the chairmanship of Union Minister. Yes, because RBI governor is there, chairman of SEBI is there, chairman of Pension Fund Regulatory Authority, Provident Fund Authority, everyone is there. So some senior authority needs to be there. So finance minister is the chairman. Answer is 2 and 3, D. Okay. Next question is about revenue receipts. Which of the following is part of revenue receipts? Interest payments, interest payment, house payment or receipt? No, this is an expenditure. This is revenue expenditure. This is not part of the answer. Dividends and profits from assets? Yes. Grants to states? Grants. Once again, expenditure, revenue expenditure. 3 is not part of the answer. Cash grants in aid from international organizations? Receipt. Central GST? Receipt. So answer is 2, 4 and 5. C. Which of the following can be the reason for decline in GDP growth in Indian economy? A reason for decline in GDP growth. If there is a decline, what could be the reason? Okay. Decline in domestic savings. Yes, because savings lead to investment. Growth in investment could lead to GDP decline. So if there is a decline in domestic savings, it could be a reason for GDP decline. Okay. So that is definitely part of the answer. Weak private sector investment, we already discussed. If investment drops, it could lead to decline in GDP. Decline in consumption expenditure. You remember the formula, GDP is equal to C plus I plus G plus X minus M. And what is leading to I? S is leading to I. Remember the circular flow of income, savings leading to investment. So savings decreases, investment decreases. So savings is a factor. Investment they have directly given, that is a factor. Consumption decreases, they have given it. Higher interest rates. So when there are higher interest rates, the borrowing will reduce and investment will also reduce. Low employment creation, income of the people reduces, consumption reduces. Decline in exports, again reduces. So all of these are factors which could lead to GDP decline in the growth of GDP. Okay, answer is all 6. 1, 2, 3, 4, 5, 6, D. D is the answer. Okay. Moving on. With reference to off-budget financing, which of the following statements are not correct? Off-budget financing is not taken into account while calculating fiscal indicators. It is because it is not taken into consideration while calculating fiscal indicators that we call it as off-budget. Off-budget means outside the budget. If it is part of the budget, it has to be calculated in fiscal indicators. The reason they are taking it outside the budget is to prevent it from being included as part of fiscal indicators. What are fiscal indicators? Fiscal deficit, revenue deficit, primary deficit, effective revenue deficit, public debt. Everything that I already told you, specifically these 4, more than public debt, these 4. Okay. So those are fiscal indicators. Is not taken into account while calculating fiscal indicators is correct. Off-budget financing is not taken into account. That statement is correct. It leads to increase in the debt liability of the government. Not correct. It does lead to. See, it is not added as part of these, but when the government is borrowing without even showing it in the budget, it still increases the debt liability of the government. This statement is also correct. But the question is, which of the following statements are not correct? Neither is not correct. Both the statements are correct. Okay. All right. Moving on. A situation in an economy when both inflation and unemployment are at higher levels. See, when is unemployment high? When there is no growth in the economy. Growth is low. When the growth is low, we call that situation to be stagnation of the economy. When stagnation and inflation happen at the same time, we call it as stagflation. Stagnation in an economy plus inflation in an economy. Stagnation leading to high unemployment and inflation at a high level. That is called as stagflation. More about this you will learn in the inflation topic. This is just a bouncer that is given. I know inflation is not done, but just to put you on guard. So you might come across these things in the newspaper. That is why we asked. Okay. Moving to the 35th question. Which one of the following statements best describes the meaning of the term tax expenditure? Don't know if it's already covered. The common interpretation of tax expenditure is money spent on collecting taxes. But that is wrong. It is the opportunity cost of taxing at concessional rates or the opportunity cost of giving exemptions. So what is meant by that is the answer. So what is tax expenditure? The government could have collected, let's say, 100 rupees as tax, but the government says, you know what, I am going to give you an exemption. I am going to collect only 80 rupees as tax from you. I am going to give you 20 rupees exemption, tax exemption, so that you use it for further production activities or you use it for consumption. Whatever, the government has its own reasons. This 20 rupees is revenue which the government could have had, but they are sacrificing. In a way, it is like government collecting the tax and spending it back. So that is what is called as tax expenditure in economics. That is why we call opportunity tax, opportunity cost of taxing at concessional rates. Okay. You are taxing at a concessional rate. How much are you losing? That is the opportunity. You had an opportunity to collect 20 rupees, but you are not using that. That is the opportunity cost. Okay, that is 35, Bombay. That is the answer. B is the answer. Okay, coming to 36. Development banks in India, very generic question. Consider the following statements. It lends at low and stable rates of interest, promote long-term investment, social benefits, low return. So if they don't, no one else does it. That is why development banks were set up, where the returns are low, but social benefits are there. So the statement is correct about development banks. It raises funds by issuing long-dated securities in the capital market. It is also correct. So long-term saving institutions like SIDBI or NABARD, they subscribe to those securities. IDBI was set up as an apex body. Yes, in 1964 it was set up. So all three statements are correct. It's factual in nature. Either you know it or you don't know it. Okay. 37. In an economy, predatory pricing. What is predation? You are eating someone else for your survival. Industries to drive competitors out of business. They want to eat away the competition. Okay, it is negative. Like when Jio came in, it almost led to the closure of Airtel and Vodafone. That is why they raised an issue saying Jio is doing predatory pricing, which means they are reducing the price so much that Airtel and Vodafone are not able to survive. And later, after Airtel and Vodafone closes shop and goes away, Jio will increase their tariff to old rates and they'll make all the profit. But that case was ruled out, saying that it is not predatory pricing. They are giving the appropriate price is the ruling that came. But the idea is it is done by industries to drive competitors out of business. Answer is A. Okay. Moving on, National Anti-Profiteering Authority. It is headed by the finance minister, is not actually correct. There is a separate entity called as National Anti-Profiteering Authority, which is headed by a person appointed for the purpose. It is to prevent activities that have appreciable adverse effect on competition in India and prevent monopoly. No, there is a body called as Competitions Commission. That is what does the second activity. When the GST was introduced, a lot of people were cheating. A lot of businesses were cheating the people, saying, oh, the prices have gone up because of GST. And they used to collect the money and not pay the government and keep it with themselves. National Anti-Profiteering Authority was established to prevent that from happening. So neither statement is correct. It is a GST related body. It is set up to ensure that no one misuses the provisions of GST to make profit out of it. 39. Global Financial Stability Report is published by, very factual question. Answer is International Monetary Fund. Okay. International Monetary Fund. So Shankar Academy website, if you go and check, there is a list of organizations and some reports published by them. You will get to know some of these things. You can learn from there, or you can keep reading the newspaper whenever it is published in the newspaper, you can make a note out of that. Okay. Consider the following statements about National Small Savings Fund. Again, it's a very factual one. National Small Savings Fund is set up to account all the monetary transactions under small savings schemes of the Union government under one umbrella, correct? It is set up under the Consolidated Fund of India. No, it is set up under the Public Account of India. Okay, so this statement is wrong. Fund is administered by the Ministry of Finance. That's correct. In fact, we had a question similar to this earlier. One of the earlier questions that we had is very similar as to who's managing what. If you look at it, that would be question number 24. Small savings is administered by managed by the Ministry of Finance. 24th question, 1, 2, 3. The third one is about small savings. This is a similar thing. So the answer here is D, 1 and 3. Okay. 41. What is World Economic Forum? World Economic Forum is an international organization for public-private cooperation. Correct. Has restricted membership only for developed companies. Private companies also participate in or go to meetings conducted by World Economic Forum. It is not an initiative of OECD. It is a private one individual who started this concept called as World Economic Forum. It happens in a place called Davos in Switzerland. There is one individual who initiated this entire concept. So it is not an initiative of OECD. Okay, so answer is A, 1 only. Okay. We are close towards the end. Just hold on. Just 9 more questions. MCA, it is a website. MCA is the website of the Ministry of Corporate Affairs to store all the data, to regulate industries. So it is not an e-governance initiative of the Ministry of Finance. It is an e-governance initiative of the Ministry of Corporate Affairs. It is a database. It can be used to calculate GDP, gross value added, because all the companies come and add their data there. So that is correct. Answer is 2 only. I hope you don't feel I'm rushing. If you feel I'm rushing, let me know. I will slow down. I don't want to hold you back for too long. That is why I'm not pausing a lot. Okay. So let me know if you want me to slow down. I can slow down. Which increases the deficit, Rini? Which question are you talking about? Space is fine. Rini, you had sent a message. I failed to see which question was that about, Rini. I'm sorry I missed that if it is something that you sent earlier. Please let me know. I somehow missed that message. Okay, Rini, you let me know the question number. I'll come back to that. I'm waiting for a response. Yeah, I'm getting a response now. Okay, do let me know. Okay. I'm sorry I missed that point. I didn't appear as a comment on my screen. That's why I missed it. Okay. Anyway, so 43. 43 is about fiscal consolidation. Once again, fiscal consolidation. So I've already explained this concept to you. Policies undertaken by the government to reduce their deficits and accumulation of debt and stock. That is correct. Massive investment by the government, not necessarily. Extreme affirmative action of government for financial inclusion. No, it's not about financial inclusion. Intense affirmative action to waive agricultural loan. No, it is policies undertaken by the government to reduce deficit, accumulation of debt, so that there is some level of stability in the government's finances. Okay, so answer is A. 43, answer is A. 44, what are the means available to finance the fiscal deficit? So you would have seen debt capital receipts. When you see debt capital receipts, you will see, I don't think you would have covered this. So external aid is definitely one. Internal borrowings from internal sources. like let's say from the market, from the public, from financial institutions, then from RBI, external borrowings. See, what is the difference between external aid and external borrowing? External aid is when you get it at concessional, take loans from abroad at concessional rates. External borrowing is at normal loans, normal borrowings from abroad. Both are borrowings from abroad. So answer is D, 1, 2, and 3. 44, D, 1, 2, and 3. United Nations Sustainable Development Solutions Network is popularly known for its publication of, we have already dealt with this question once, World Happiness Report. They published the World Happiness Report, UNSDSN. I told you about those 6. I told you about that ladder called as Cantrell's ladder. 6 criteria, 6 factors which are considered. So that is World Happiness Report. It is published by United Nations Sustainable Development Solutions Network. 46. With reference to GST compensation to the Indian states, I hope this is covered, GST compensation. Every 6 months, GST compensation is paid out of compensation cess account by center to the states. Every 2 months. So this is wrong. According to GST Act, states are guaranteed compensation by the center for any revenue shortfall below 14% growth for the first 5 years of GST implementation. Correct. That is where the whole debate came about. Answer is 2 only. Consider the following statements about National Strategy for Financial Inclusion. Released by the Union Ministry of Finance. No, if I'm not wrong, it is released by the Reserve Bank of India. National Strategy for Financial Inclusion. Okay, it is done by the Reserve Bank of India. I'll just confirm that. I don't want you to have the wrong information. National Strategy for Financial Inclusion. Okay. The second one, it aims to create necessary infrastructure to move towards a less caste society. That is correct. Yes, this is by RBI. It is not by the Finance Ministry. Okay. It is something that was released on January 10, 2020. So my suggestion is, please do a little bit of search and read up about this because it was released so very recently. Okay. The second statement is correct. So answer is 2 only. Okay. Do read up about this. It is relevant in the current affairs. That's 47. Which of the following is capital expenditure of the government of India? Interest payment on outstanding loans? Nope, that is revenue expenditure. Okay, so this is not answer. Subsidies provided? No, that is revenue expenditure. Salaries of government employees? No, that is revenue expenditure. Irrigation projects within a command area? That will be creating assets. So that is capital expenditure. 48 answer is Delhi. D. 49. Okay. Consider the following countries based on health, education, standard of living. Yes, Human Development Report does that. Standard of living is calculated using gross national income of a country. No, it uses per capita gross national income of a country. There is a difference between gross national income and per capita gross national income. It uses per capita gross national income, not gross national income. India comes under the medium human development report. Yes. Group. Yes. Answer is 1 and 3. 49. D. 1 and 3. Getting to the last question under consideration here. Consider the following statements about Gini coefficient. Gini coefficient of 1 represents perfect equality and 0 represents perfect inequality. If you know the name of the index, Gini inequality index. Inequality is what we are trying to measure. So 1 represents highest inequality and 0 represents perfect equality. So first statement is wrong. A high income country and a low income country can have the same Gini coefficient. Yes, if the inequality is less, if income distribution is similar, so 2 is a possibility. So answer is Bombay. All right. So with that, we have completed the discussion. I have taken the 1.5 hour mark that I told you about. How per capita Guinea is calculated? I told you, right? Sorry, per capita, what is calculated? Per capita GNI, national income, is what is referred to as gross national income. Whatever we learn in class as gross national product, GNP, that is what is gross national income. It's the same as that. Okay. You divide it by the population, you will get per capita gross national income. That is how you arrive at it. Okay, Shivapriya. Okay, I'm done with the discussion. If you don't have any other questions, I can then disconnect and leave. How about Rini? Rini, did you get that question? Do you have that question? Let me know if you have that question. All right. So yeah, I know. I was just checking if there is anything else after this. So coming to Rini's question. So Rini's question is about, while discussing tax expenditure, concessional rates, in turn, deficit is increased. True. But we are just calling it as tax. The question has nothing to do with deficits. In the question, tax expenditure means what? It increases the opportunity cost of the government. So in a way, it will increase deficit, which we already dealt with, right? Already in a previous question, we said that's correct, Rini. So that interpretation is correct. Okay. So if we don't have any questions, then any further questions, we can disconnect and we can leave. I think that is all. Current affairs, I think, will be shared as a video, if I'm not wrong. That is what I was trying to check with the backend. Affairs will be there or not? Is it only economics? Because based on my information, it is only this. Okay, I don't see any response. Current affairs next week. Okay, great. Only economics. Then you can disconnect and leave. We are done with the class. There's nothing else done with the discussion. You can disconnect and leave. Go have dinner. I'm also extremely hungry. I've been having class from afternoon. You're welcome. If you have any further questions, you have my email ID. You can drop a mail to me. Welcome. Welcome, Archana, Akshaya, Rini, Harini. You're welcome. Shivapriya, you're welcome. All right. So I'll disconnect.
Hello, sir.
Arvind?
Anbu, sir. Arvind. Yes, sir.
அவ்வளவுதான். நம்ம ரெண்டு பேர் மட்டும் தான் இருக்கோம். நம்ம ரெண்டு பேரும்
Okay, sir. Okay, sir. Thank you, sir. Good night, sir.
Welcome. Good night. ஹலோ அரவிந்த், நான் நீ பாத்துட்டு இருந்தேன்னு நினைச்சப்பா, அதுக்கு தான் கால் பண்ணேன். முடிஞ்சுன்னு சொல்ல நான் அன்பிட்டு சொல்லிட்டேன்.